Good morning, everyone. This is Travis Witherspoon from Carter Cow Capital, Carter Cow Trading on Facebook and on Instagram. You're going to go live on Instagram as well. Trade with Travis on YouTube. Hope everybody's doing very well on this Thursday morning. We are taking a look at some overall pairs and trying to see if we can be able to get into some. We're going to start off very quickly because we were looking at the market. We may end up having a entry when it comes down to the Nas 100 and being able to get in just for a quick little scalp of the market and being able to go from there. I'm interested in being able to do that, but let's go ahead and go through the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to do for Forex trading. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, show myself onto the screen. Instagram, how you doing? Facebook, how you doing? YouTube, how you doing? Hope everybody's doing very well. If you're interested in learning a little bit more about what we end up doing, you can go to the bottom portion of our actual bar line where you can see cartercowcapital.com/start here. Hop inside and be able to hop into one of our free webinars. As we go through and we take a look at what's going on with the market, let's go ahead and take a look at the economic calendar, take a look at the big three, and then after that, see if there's any type of trading pairs that we can be able to get into. Now, the stock market has been falling, and it's been falling a lot over the course of the last 4 to 5 days, and we kind of predicted that a little bit earlier with the bearish crown on the NASDAQ 100, but the US 30 and everything else has been moving down as well. What does that mean? That means that pairs like the Japanese yen is going to end up thriving throughout this overall time. We actually end up having yesterday where the interest rate decision actually ended up coming out, that information actually remained to be the same. So what we were trying to do yesterday was that we were trying to look for a high price to be able to get in for the market and then look to be able to sell from there. This came out right around 11 o'clock. If you was up around 11 o'clock and seeing how the market ended up moving, we expected that the market was going to push up and then after that give us an opportunity to be able to sell down. I have been able to get into that market and look to be able to sell, and hopefully we can be able to find a position for you when it comes down to that overall movement as well. Let's take a look at what's happening today. We had a press conference that ended up happening at 2 o'clock in the morning. Right now we have the unemployment rate and everything else for Germany and the Eurozone in general. A little bit later on today, we're going to end up having a European Central Bank interest rate decision. Their interest rate decision is expected to be at 0 and remain to be at 0. If we go based off of past knowledge and looking at what happened with each and every pair, the Canadian dollar had that interest rate decision. They remained to be the same, and the news ended up being negative. We looked at what happened with the euro. We looked at what happened with the Japanese yen. That interest rate remained to be the same, and it came out to be positive. So if I'm looking at this overall how the market has been playing out, if we look at the Eurozone and they expect to keep it as a 0 when it comes down to the rate, I believe that's only a good thing when it comes down to the Eurozone. So when looking at pairs like the Euro dollar, looking at pairs like that, I believe that we should see the market start to have a little bit more of an uptick when it comes down to that move. So we'll get into that a little bit later on. Let's go ahead and take a look at the big three when it comes down to overall pairs. Right now, as we're looking at that, for the people that are hopping on, thank you for hopping on. Please make sure that you like, share, and subscribe. To anyone that you think that may be interested in this overall video on learning how to be able to Forex trade. Right now, what we're looking at is what's happening with oil and then seeing what's going on with that. So currently, our mindset when it came down to trading this was that we were looking at being able to sell, but we were looking at being able to find a high price in the sell zone to be able to sell overall. The weekly, when the market ended up opening up, basically opened up bearish. But we was talking about consolidation because of what was happening with the overall election that's going to end up happening on the 3rd. So if we look at what's happening right now, we have a counter trend line break as we speak. Right now, this market is basically trying to tap the bottom side of this overall move. But for the last 3 weeks, the market has basically been in the same position, which means that on a monthly, the market will be basically pretty much it's going to end up being undecided for the overall move. So what does this mean? This means that we're still undecided when it comes down to the overall movement of the market as well. So that means that we haven't been finding a lot of trading opportunities unless we were looking at scalping or consolidated moves. All right. So with that being said, let's look at the daily and see where we're at. Currently, the market has been pushing bullish. Currently, we're basically at the point to where we're about to retest the backside of the trend line. If this market rejects and falls to the downside, then that means that the bears have controlled the market. If we look at what's happening right here, we see that the market is in a no trade zone. That means that we shouldn't be looking to trade on this pair at all unless we were trading consolidation a few days ago. So right now, when it comes down to U.S. based pairs, I'm kind of off of them a little bit when it comes down to being able to trade them, unless there has been an underlying movement that is just underlying movement that just makes more sense when it comes down to trading. And I think the underlying movement is being able to look at what's happening with the stock market. The stock market has been falling. Since the stock market has been falling, I want to take a look and see what's happening with the I want to see what happened with the yen pairs. All right, now let's take a look at oil. We end up talking about how oil was going to end up basically going from resistance down to support. I wish we never would have got stopped out of this overall pair, because this would have been a very good move for us. The market actually ended up hitting at $37 a barrel and ended up completing its overall de-extension a little bit earlier. Since then, the market is at $36 a barrel. Now what we're looking for is this. We're looking for, on a 2-hour, for the market to be able to give us a little bit of a retracement, try to see if we can retest and then fall. The market has already retraced and has already basically retested. So anything from here is just basically a full-blown test or full-blown move for this overall market. So this is what we need to do. We're looking at being able to trade on oil. We need to understand that, okay, the de-extension has been complete off of this overall move. We have to wait for this market to have to retrace. There's no play on being able to do this. We want to see the market retrace, give us a new field to be able to work off of, and then after that, the market has already told us that we should be looking at bearish movement. So we're going to look at trading toward the downside. But it was a good move. I wish we would have got into it. Obviously, we're trading this based off of consolidation rules, and sometimes you're trading based off of that. The rules have to be the reasons why you don't get in the trades sometimes. So it is what it is when it comes down to that. Let's take a look at gold. Gold is basically moving to the buy zone on the daily. Remember, on the weekly, it was already in the buy zone, looking at being able to push up towards 2,000. Looking to push up towards 2,243 for this overall move. Currently, right now, as we speak, if we zoom in, we can see that this market is basically retesting the backside of this trend line. We were looking at a buy, and we said that if the setup was right for the overall buy and maintained to be above the 1903 area, then we were looking at being able to buy up. Currently, right now, what happened was that the market actually ended up breaking below that overall position. So hopefully you never took that trade, because it never gave us an end to be able to get there. We should be looking right now. The market is in the buy zone, so we are looking for potential buys at this particular point. But if the market continues to move down, then obviously the market goes from bullish to bearish. So anything that breaks below this overall trend line to the downside, then the market will be considered to be bearish. The market pushes back to the upside based off of this overall movement, and once again, based off of fear of what's happening with the US dollar, then we should see a push to the upside. But that's where we are at this particular point on this overall move. Currently, I won't do anything because the market is not in the buy zone, and I won't look to sell it because the market is close to the buy zone as well. So there's really no trade to be able to take at this particular point in time. Let's look at the NASDAQ 100. NASDAQ 100. We look at it. We talked about this bearish crown a long time ago, and saying that this market could fall down to the weekly 382 at 10,238. This market has been moving down ever since. And I kind of went against my overall plan, and I will be honest. I was looking at buy trades within this overall time at some points, and I looked at this counter trend line break and never took the sale. So trading against what the trend was made you end up getting hurt when it comes down to this overall move. This market has broke this A for the overall movement, so the only movement is to the downside. If we can be able to find a high price, possibly we can be able to get in. The only problem is that the market is in the buy zone. With the market being in a buy zone, it makes it very tough to be able to look at any type of buy trades. When it comes down to this movement, and you look at what the market is right now, it's currently right below the overall, the point of control at 11,313. So the thing is, if you do want to trade this is only scalping. This is really, you pick your point, you try to get as many pips that you possibly can, and then be able to go from there. The one thing that I do like about this trade is that the market is in an R3 zone. R3 zones basically tells you what a market could potentially fall to for this overall go. So what I'm looking for today, only today, is that the market will end up falling down to the 11,000 mark. And if it ends up breaking below 11,234, then the market will continue to run to the downside. Our stop will have to be just above the overall B for its overall position, which will be at basically 11,360. You're looking at being able to make this trade right here. Stop loss. We go to the talking about 150 points from here at this particular point. Kind of giving you a sneak peek into what we do for is our overall money management. If I'm looking at this overall market and I'm looking at being able to make a trade, we know that the market is definitely in an R3 position. There has been a counter trend line break. The market is a little bit in the sell zone, but the daily is definitely not in the best position to be able to take. I would definitely lower my risk when it comes down to this. And we know that we're going to end up trading off of 1.4. So if I'm trading this right now, I'm going to end up trading with 2 micro lots to the downside. We'll see if we can be able to get that. What is the overall points to be able to go after it right now? If we're taking this trade, I would say it will end up being right around 292 for this overall win. Now, that's enough to be able to suffice for the overall points. It could be a $600 gain based off of a $250 risk. I'm going to end up taking that trade. I'm going to be very tight with my stop loss. If the market gets me to a point to where I can be able to protect myself while doing this, then I'll be able to do it. I don't want a sell limit. I want an actual sale right now. Okay, so we just took the sale on the NASDAQ 100. As we are in, once again, stop loss when it comes down to this particular point, it's going to end up being just above 11,360. Take profit is going to end up being at 11,000. Well, they have it at 11,940. So if you want to go a little bit higher than that, you want to say, 10,950. If you want to say 10,950 as the overall spot, then you can. If this market does fall based off of point of control, Ali, what's going on? If this market does fall based off of point of control, and it breaks past the 11,200 mark, it's going to run. And that's going to kind of match up with this overall position that we talked about where the market's going to end up falling. So I'm going to take a chance on this one. There's no reason not to take a chance on this one. We'll see if the market is going to end up falling down. I wish we could have got into it a little bit earlier. But quite frankly, this market is in an R3 position on the 2-hour. When the market's in an R3 position on the 2-hour, you're going to end up seeing less trading to the upside. So hopefully we can be able to get that, and hopefully that can be able to play off to be the same. And we'll end up going from there. So please remember that the market is in the buy zone. With the market being in the buy zone on a daily, this could get away from us. And you have to understand that when you're trading. Obviously, anytime that you end up taking any type of trade, you have to know that it could get away from you and go awry. But this is one that I'm just gonna end up taking because obviously the market is in a R3 zone on the 2-hour. With the market being in an R3 zone on the 2-hour, we're going to end up seeing one-sided trading. If the bears can be able to push the market down a little bit more below that 11,200 area, the market will fall to that overall area that we think that the market is going to go down to. If that does happen, then obviously it keeps on moving towards the weekly goal as well for this overall move. So I'm going to take a chance on it. And we'll see how everything kind of goes with that. So we are in on that trade. I'm just going to end up getting myself away from this overall computer and allow the market to be able to do its thing for us that. And obviously, if it does play out to be the same, and it does play out to be to the downside, then obviously everyone that's trading this will be happy. If not, then obviously it is what it is when it comes down to that. So that's where we are when it comes down to that trade. We are in on that trade to the downside. And right now we'll just manage it and see how everything goes. Let's take a look at the US 30 while we're at it and see if there's any type of movement on the US 30. Typically the US 30 moves quicker than the overall move from here. Currently right now, I can see right now there's no trade to be able to take on this one because the market just hit the D extension already. It hit the D extension and that movement has already been made. Quite frankly, give me 1 second. Here you go, Papa.
Thank you.
Market has already hit the D extension. We're looking at, quite frankly, we're looking at new fibs on this one. We got to see about what a weekly is going to end up taking this market. I'm taking a chance on the first one, so I'm not gonna risk it on the second one. There's no reason to put too much risk on, especially when the market is in the daily position, where the market is in the buy zone. That's the reason why I kind of looked at a buy trade yesterday when it came down to the move. But like I said, as long as the market is moving to the downside, if we keep on getting this and it moves below 11,200 and it gives us the opportunity to stay in this market, then I'm going to stay in the market. If not, then obviously we'll take a little bit small of a hit. So I don't like what I see off the US 30. I'm not in that market. We already talked about oil. We're not into that market. We already talked about gold. I don't like to trade on that market either. I do see consolidation, so we might end up seeing a pushback to the upside a little bit later on. As long as the dollar is pushing to the upside, that means that the Nasdaq and the US 30 and probably Bitcoin will be moving to the downside. So you have to keep that in mind. Let's talk about some of the open pairs that we are in at this particular point. One of the trades that we end up getting in was the New Zealand dollar Swiss franc. Another pair that we end up getting in was the US yen, and a third pair that was the New Zealand dollar Swiss franc. So I took the US. I did on the US yen. We talked about this one a little bit earlier for us being able to trade this to the downside. So we're going to hop in and we're going to talk about this overall pair. I don't like the position that I end up getting in. I actually end up getting into this position a little bit later than what I thought I was going to end up getting into it. This market actually ended up breaking the trend line right around the one. We put a horizontal line. The market ended up breaking the trend line right around the 104.32 area. That's exactly what we were looking for to the downside. This market is in an R3 position as well. If we're looking at what this market could potentially go to over the course of the next few days, it could go to 103.49. 103.46 to the downside. Now remember, if the market breaks below 104 and remains to be below 104, then the market is going to continue moving down to the 101 area. You can almost book it, put that in the trash. You can almost book it that the market will end up doing that. Okay. Now, obviously, we was wanting the market to be able to go up to the 104.70 area, but that did not happen. And also, we can see on the daily that the market is getting close to the buy zone as well. Okay. So, with that being said, what is the plan when it comes down to trading this? One, if you got in a little bit later, you have to lower your risk overall. Give me 1 second. Here we go. Come on, go with your mama. Go with your mama. If we're looking at what a market actually is, we have to lower our risk when it comes down to this overall trade. We are looking at being able to sell. We do expect that the market is going to end up selling down to that overall zone. Now, where do we have to place our stop? What I actually ended up doing was I actually ended up going with only one micro lot when it came down to this trade. We know that the weekly, we know that this market could bounce back up and give us a higher price. So if it's going to bounce back up and possibly give us a higher price at some point, then what I end up doing is being able to add on once that happens. But right now, at this particular point, I went down to 104.32, took a trade and got in on that position. Took a quick $20 gain off of that overall move. Currently, right now, I'm actually in this trading pair right now at 104.16. The market is at 104.12. The market is actually moving down again. If the market does fall down and hit 103.47, then that will be a profit for us. My stop loss on this overall pair will be just above the swing high at 104.90, which will basically make this more of a scalping trade than it would be more of a swing trade. So that will end up being right around 77 pips going after right around 70 pips. So we're looking at basically a 1 to 2. Basically looking at a 1 to 2 on this one. I literally just got a hit when it came down to the Australian dollar, United States dollar for selling. For this overall position. So we need to pay attention to that as well. Now, moving forward, everyone give me 1 second.
Oh no!
Reggie, what's going on? Hope everything's going well with you. Um, as we look and see where the market is right now, this is definitely more of a scout, because I do expect that the market will pop up at some point. So stop loss, I'm going to go ahead and place this in now. I should have placed this in a little bit earlier, but I'm going to place this in now. I'm going to say 104.90. Take profit. We're going to end up saying 103 or 103 70. No, 103.49. I believe. I think it's 103.49. Okay, so that's where our original position is going to end up being. Okay, and we're just looking to be able to scout the market from here. Remember, 104 has been an area where the market has pushed back up. If the market gives us a higher chance to be able to get back in, then we're averaging a little bit more, because we didn't catch it. Because we're adding in just before or just after the counter trend line break, there can be a chance that the market could push back up. With that being said, I'm just going to remain to be in this overall position, and I'm going to go with a smaller lot size. So if the market does hit my position, yes, I make a little bit of money off of it. If the market does push back up, then that means I can average in on it a little bit more. Remember, we made money off this first initial move when the market actually ended up going down right here. Now, currently, we're trying to get on that actual sale again to the downside and be able to maintain that trade. So US yen, that's the next trade that we're looking at. Remember, the Eurozone, Euro USD is actually going to have some news that's going to end up happening a little bit earlier today with interest rate decisions. We're going to take a look at that pair and see how that's going to be affected. Currently, right now, we can see that the market is on the daily is moving from the buy zone. Moving from the sell zone to the buy zone. So we're seeing more people actually trading this to the downside. The market has not went into the sweet spot area yet, so I do expect that the market is going to end up falling now. Overall, if we're looking at it, the market could fall down to 1.14, which will end up making that the sweet spot. Currently right here, that's about 300 pips to the downside if that does happen. Now, we've seen a little bit of consolidation between the 117 area to the 119 area to the upside. I am interested in being able to buy if the market maintains that actual position towards the upside. We're literally at support in this overall position. The only thing that I do not like is that the market is in the no trade zone on the daily. With the market being in the no trade zone on the daily, and the 2 hour basically being in the sell zone, moving to the buy zone on the daily as well, this market could basically fall down to 106.50, and that was our original area for looking to be able to place a stop loss. I'm gonna cancel. I'm not gonna look at trading this pair. There's nothing to be able to look to trade on right now at this particular point. There's unfortunately, would love to be able to trade it, but there's nothing to be able to trade at this particular point. So I'm off on that pair. I'm not gonna look at that. I end up getting a sale on the Australian dollar, US dollar, and I can see why. Let's take a look at the daily. We can see that this market has broke the counter trend line break. Is moving towards the downside. Remember, consolidation on this one was at 70.25. The market has pushed. If it's going to remain to keep on pushing down, then the market could go down to 67 or basically 68 at this particular point. That's 200 pips to the downside. I'm trying to see which automated system placed me in that trade. That was the okay, which one of these? Okay, that was our Rising Auto. So Rising Auto is a moving average trade. I see a death cross right here. I'm going to take this trade. We're going to take this trade to the downside. We're going to end up placing our stop directly at the same position as where this market actually is on the Rising Auto. That is at 70.86 for the overall stop, which is about 43 pips. That's not bad for the overall stop. It'll be about 40. It'll be about 50 for us. Take profit for its overall position is expected to be at 161 pips away, so 68.72. So we're talking about a risk of 54 pips to a reward of 160. I am interested in being able to do that. Let's go to FMA and take a look at that overall. Okay, we go 60. That means that we're risking basically 5.5 mini lots. We're going after 162. That'll be $874 if we do take it. obviously we said that the weekly on this one was expected to be, let me go, I need to confirm something real quick. We said that the weekly was expected to be up on this particular pair. We've seen that the bulls have basically been controlled. I mean, the bears have basically been controlling this market. This market is close to the buy zone, but it's not in the buy zone, if that makes sense. It's the same thing that's happened with the Eurozone. It's the same thing that's happened with the same thing that's happened with a few other pairs. The market is close to basically hitting that support area, so we do have to pay attention to that. I'm not going to end up going with a 4% risk. I'm going to go with a 3% risk, kind of lower my risk percentage on this one. So I'm going to go with 4 mini lots instead of 5 mini lots on this overall trade and be able to get in. I'm going to go ahead and lock this one in this morning and be able to go from there. So just give me 1 second. We already done said the stop loss in the take profit area for us being able to get in. But we're going to go ahead and get this situated. Let's go say 4 minis. And we are selling that right now. So we're actually in on this sale as we speak. Typically, the Robinson Auto does a very good job of being able to find pairs that are safely in the sell zone. Sometimes it gives a little bit of a pop up, but it's only a 50 pip risk on this one. We want to see how this market kind of reacts towards the downside. I am kind of worried about what's going to happen when the market hits 70. But if it does hit 70, that's about 20 pips away from this overall position. So that's about 30 some pips away from this overall position. So if this market bounces right around this 70 mark, 70.50 mark, I'm sorry, yeah, 70 cent mark, then at the least, they're talking about $132 for the overall goal. Now, obviously, we'd love to be able to get all 800. If we don't, then it is what it is. But looking at the take profit of where this actual position is on what we expected before and where the automated system basically end up saying, hey, this is where we should be able to get in, I'm actually comfortable with that position. I'm actually comfortable with the take profit on this one. So I'm going to match up and make sure I end up having the same stop loss for these overall positions. Stop loss is at 70.84. Take profit is at 68.70. All right, so let's go ahead and place that in. Stop loss is at 70.84. Take profit is at 68. What was it? 68.70, I believe. And we'll go with that. Now, overall, if I'm looking at this a little bit more in depth and going based off of this stochastics and not based off of what my automated system is, we can actually take this a little bit longer, down to the 68 area. I actually like that a little bit more. It gives us a little bit more value when it comes down to being able to trade to the downside if this market does continue to fall to this overall position, because that means that, quite frankly, if we look at 68, when we put this line right here, we can say that would be an area where we have to be able to pay attention to. So I may end up looking at 68 as a overall position, but we have to keep that in mind if the market keeps on falling. The D extension is expected to be at 68. Matter of fact, that's what I'm going to do. I'm going to put it at 68, and we'll manage it once the market hits the point of control. Let's see. We'll go with 68. That makes it 235 pips. So basically it makes it a 1 to 5 if the market does continue to fall right there. All right, I got time for one more before my son basically ends up telling me that we need to stop. Come here. Say hey. Say hey. Okay, now you're not photogenic. Say hey. Okay. You're just trying to pull the phone now. All right, let's get you some juice then. All right. Let's look at one more trading pair. But there's nothing in there. Yeah, we got to get you something else. Take it. You're going to be upset because there's nothing in there. All right. Last pair. let's take a look at the pound United States dollar. We was looking at being able to buy on this overall pair a little bit ago. As we go through and we take a look at it, this market is in the sweet spot area, but it has not broken the counter trend line break yet. So it's in an R1 position. If you are looking at being able to buy, I wouldn't buy it until the market actually ends up getting into the buy zone. So we want the market to be able to go down to this overall area if you are looking at being able to trade it. We have seen that this market basically has made a double bottom where the market has failed down to the 128 area. If we're looking at how the market is basically falling right now, it could necessarily fall down to possibly that 129 area again before actually pushing back to the upside. Now, just for the sake of doing that, I want to see what is the point of control when it comes down to this position, because that may give us insights on where the market could fall down to. Point of control on this position is at 109, 129, 129.38. The market falls down to 129.38, then that could be a solid position for us being able to look at being able to buy. But that also means that we could have, that means that we could look at a death cross right here. I'm not looking at buying right now because the market is in the sell zone on the 2 hour. We look at the daily is not in the buy zone as of yet. And we're under the point of control on that position. So that means that it's actually resistance at this point. If the market keeps on moving down to this position, it could fall down, especially if it breaks below 126. Oh, I'm sorry, especially if it breaks below 127. It could fall down to these areas right here for its overall support. So I'm actually out for this one. I'm not looking at being able to trade this one right now. I don't like what I see for its overall position. But we'll move on from there. So let's talk about it. Let's talk about the trades that we're in right now. We are in the Australian dollar, United States dollar. We have a stop loss of 70.84 and a take profit of 68. Remember, 68.80 was the original position based off of Robin Auto, so we'll keep that in mind. New Zealand dollar, Swiss franc. We are in that trade. We got in at 60.50 with a stop loss at 61.20 with a take profit of 57. We are in the U.S. yen. That market is at break even right now. The market has been pushing from that position. Remember, we really lower our overall risk on this pair. So if the market does get away from us, if we can get a high price and we like it, then we'll go ahead and take the sale. If not, then we won't do anything with it. And that's it. That's it. Oh well, we took another trade on the NASDAQ 100. With the market being in the NASDAQ 100, we end up taking a sale. We're going down to basically the let's see, NASDAQ 100. We're taking a sale all the way down to the 10,095 area, basically 11,000. Currently, the stop loss would be at 11,360. We are currently up on this overall pair right now. But remember, because the market is in the buy zone on the daily, we have to be a little bit tighter with this one. I want to move this stop loss in the break even as quick as possible. If we can be able to do that, then I think we'll be in a good position. All right. Now, if you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you end up subscribing to Trade with Travis on YouTube. Also, make sure that you end up sharing the video with somebody that you think that may end up liking it. Obviously, we do this each and every day to be able to help out people for being able to get started. If you want to be able to hop inside of one of our free webinars and learn about what we do, you can be able to go from there. Like always, plan your trade your plan. I'll see each and every one of y'all going into tomorrow and Friday trading. Everybody take it easy.